In the past 24 hours, the crypto market was hit rather hard. 1.27 billion in total liquidations, 1.15 billion being long liquidations. Literally 335,000 positions were liquidated, and I'm talking liquidated. And the largest single liquidation was $33.95 million on Bitcoin. There is a structured approach to understanding how the markets move and why they move, more importantly, and then understanding your price chart and how it's moving on a monthly basis and also how it's moving relative to its peer group. This will help us to answer the question, is the crash over or is it just getting started? Let's run the numbers. To our global CTKS family, we're grateful that you're here. All of us together make this one of the best communities on YouTube. Here, we use the world's leading indicator of price, the CTKS method, to give us X-ray vision across stocks, cryptos, forex, commodities, and yields. So we can see what the top 1% in financial markets see before the move happens. That's a license to print money and a way to stay safe. Whilst others are panicked, we are calm. When others guess, we stack probabilities. We don't fall for hype or stories, we profit from reality. We know making just 3.5% per week is a 498% profit per year. We are the elite 1% in financial markets. Price moves in waves, so no matter if price is going up or down, please be kind to yourself, be kind to others. Be dedicated and committed and never blame. Instead, learn and grow into the best version of yourself. Let's see what the markets are doing today. Legendary investor Warren Buffett says, only when the tide goes out do you discover who's been swimming naked. Now, what exactly does this mean? And what has it got to do with is it over? Warren Buffett wasn't talking about clothing, he was talking about knowledge. Rule 289, price waves are structurally bound. Now, what does this actually mean and how does it help us to answer, is the crash over? When Warren Buffett was talking about swimming naked, he was talking about knowledge. And when you have knowledge, you can read a price chart and understand when it's weakening and when it's strengthening. So the question is this over? Now, if we just look at this price chart, whatever answer that you would come to would be incorrect. Now, why is that? Because we're simply not stacking probabilities. Rule 289 can give us insight if this movement is over, because all price is structurally bound. And I'd just like to do a bit of a call out to Michael. Michael put this answer in the question that I gave in yesterday's video. Where will crypto markets go in the next 24 hours? I used to find that a difficult question to answer, but now I know it will simply go to CTKS structure, which I'm going to pop on in a second. Things are so much easier. No guessing required, just pre-plan for up, down, sideways scenarios and scale in and out at the SLs accordingly. An SL is a CTKS level, also called a Stanfield level. They're the dotted lines that you will see when I pop this indicator on. And Michael goes on to say, rather than waste energy guessing, it's better to put out that energy into the cheat sheet, which will give a much better clue on where crypto is heading. Fantastic answer. And thank you to our global family who comments. And of course, if you just watched, that is awesome too. But just putting these things down inside the comments really helps other people out. And that's what we're all about. So when we look at yesterday's video, we were just here around that 110 mark. Now we know that Bitcoin's price is structurally bound. So we need to look at the chart getting marked up with level 1 and level 2 standard certification. So let's just pop those lines on. Now what we saw here was a very gappy structural perspective on Bitcoin. Now, gappy structure means that the smart money is not supporting price. So if we went down below around this 108,700 level, the next area of support is literally where we are right now. And if we lose this one, the next level is at 103,800. And it does show some other things right here. Up around that 111,200 mark is so much overhead sell pressure. When we look at liquidation heat maps, we're looking at where the money is flowing, and that money just changes so dramatically. It's just unbelievable. But structure is something that is completely different. Structure stays static, at least for the month. So when you see this structure inside the market, we can look to the right. This is where the liquidation levels are really hitting or playing out. Now, when we get thinner and thinner structural support, so just think about the case that we are here around that 110,000. Around 110, if we lost around that 108,700 or 108,800, it was going to get really iffy. If we started to lose that 109,600, it was starting to get very problematic. And you can see we had a structural overshoot here around that 108,700. Why was that? Because we went into a negative CTKS gap, and because we had so little structure, it became incredibly volatile to the downside. Now, the question of this video, is the crash over? Now, I would ask you the question, does this look over to you? Does it look like we've got so much structural support that we're just going to get all the buyers coming back into the market? Or does it look like we've got a negative CTKS gap and structural probabilities for support below? The answer to this question should be absolutely obvious. And if it is not obvious, you could say that you might be swimming naked. Now, looking at price action just from this perspective, are we recovering? No, we're under pressure. And until we break out at least this 107, we're not going to get any reprieve from this downward price momentum. Also, we're very subject, and the probability is high that we'll get a structural overshoot around that 103,800 if we come down. Now, I say if we come down because, as Michael points out, the CTKS method makes you think about three-dimensional risk management. Three-dimensional risk management is like this. Everybody thinks it's coming down and it will continue to come down. We think like this. It's come down, but it could just as easily go back up. Now, why the hell do we think like that? Why don't we think like everybody else who's doing it's all over and swearing on their thumbnail and just whacking clickbait out there? Well, we don't do that because we know the price is always moving in a wave. It comes down to structural support. It tests the structural resistance. If it can't get through, it immediately targets a lower level. If it can't go through that, it immediately targets a lower level. But if it can go through that, it immediately targets a higher level. We're all about CTKS targeting, so we understand exactly where the structure is, exactly where the algorithms are. The algorithms came in at 107 and bought Bitcoin up. They're hoovering it up at the moment. Now, why do institutions do this? Why do they buy when the price goes down? Because that's the way that you actually make money. Unfortunately, most people have been taught that you're in the market, only get in the market when the price is going up. After all, Warren Buffett famously said, you don't lose money. That's rule number one. Rule number two, see rule number one. Now, of course, Warren doesn't obey his own rule because he actually buys when it's coming down. And all professionals do that. Retail gets caught in at the top and professionals just seek to buy lower all the time. And it's also important, not the bottom. professionals don't seek to buy the bottom, they just seek to lower their average buy cost and to ride the waves and the momentum inside the market. When you understand where the structure is, you're not guessing. And we did see that up around this 111.200 mark, there was just so many sellers inhabiting these areas. Combining that with light structural support, we got into this nasty sell-off. The critical thing, if you don't know where the structure is, and there are 2 levels of standard certification required to do this structure, it means that you're likely to be guessing and hoping rather than knowing. Students from the Profiting Masterclass, make sure that you go and refresh, especially week 1. Week 1 is incredibly important. Now, when we look from a Profiting Masterclass perspective, we know that we need the structural levels on total crypto market cap and Bitcoin, and also the chart that you put money into. When we get those 3 levels, we can understand how the crypto market is moving. That's an absolute base minimum. There are a lot of levels inside structure. Now, why is that? And you may not have actually connected the dots before, but JT, and thank you for your comment. And welcome back, my friend. JT said many trades return 3 to 5 to 10% in about a week's time. In yesterday's video, I was talking about a 3.5% return per week. That is a lot of money. It's literally effectively a 500% return per year. And JT rightly says, we don't wait for the 100x's, the 10x's, we create them with the masterclass and the service. The service gives you these indicators that I pop on and off. And JT says this is the 1% of all YouTube crypto channels, and the CTKS family, one of a kind. Absolutely. 3% a week is very doable if you obey the masterclass rules. Thank you, my friend. Just a beautiful comment. Now, what we need to do is to look at total crypto market cap, because this is literally every single project, every crypto across the market. Now, we'll turn on the indicator from the service and we'll get an understanding as to where the structure is residing in. Remember, Bitcoin was at 110,000 and total crypto market cap was at 3.66 trillion. What we did is that we initially did a bit of a surge trying to get up into all of this sell side area, but there were just simply too many sellers there. Now it took off because it was a positive CTKS gap, but all of the sellers actually pushed it down. We had a structural failure at that 3.66. As soon as we got that, we had a structural target down to $3.6 trillion. Now, when you have a negative CTKS gap, you can get structural overshoots. And the next structural level was at 3.56, where we wobbled around for a little while, and then unfortunately we dumped down to the 3.47 trillion. We just resided back, and now we're retesting it. This is the exact reason that Bitcoin bounced and has held its price. Inside the Profiting Masterclass, I teach people how to read between charts. So for example, we're back on Bitcoin. So as the entire crypto market came down, total crypto market cap found structural support and it rebounded Bitcoin back into this 107 area. And you can see that Bitcoin has a bit of a flight to safety because the alts are lower. This understanding is important because a lot of people will say these bloody alts, they just keep on going down and down and down. After all, there's 26 million of the little critters. So the institutions are chasing the top 100 and retail chasing everything but that. As price is always moving in waves, we can take advantage of these up and down price movements. If you're actively trading, that's also a good thing to do. The markets are going to be really turbulent, so please strap in. One thing at least, we have support across the entire crypto market down at these levels. Now going back into total crypto market cap, and you need to apply this method of logic to your trades and investments, or else you'll get just piffed out of the market all the time. Now, what I've done is I've just revealed a little bit more downside. So is there a lot of structural support underneath here? If there is, and remember Bitcoin doesn't have it, but if there's a lot of total crypto market cap support here, the entire crypto cap will bounce up because it will find buyers. So let's just pop on the service indicator. So is that in fact correct? Oh no, it is not correct. So the next stop is 3.39 trillion. So if we lose this 3.7 trillion, please strap in, hang on, and the next area is 3.39. Now, does that mean it will absolutely come down to this? Of course not, because price is moving in a wave. What the market loves to do is to go in the opposite direction to what people think it should go in. Now, why does it do that? Apart from being a fruit basket and a basket case of a thing that we just have to deal with, it is all about sentiment. So when people get too negative, all the shorts pile in and it's a sure thing and the market goes wrong. And when the market is going up, all that green fire, all the longs pile in and the market says wrong. A really good question for you. If you put at CTKS method and press search on YouTube, just go into the positive mindset tunes and hit the playlist. The question is, which of these songs is the best, or do you find the best to explain current market price action? Now, quite seriously, this music will change your mind on how you approach the market. It is literally wisdom to a kick butt tune. So if you're sick of the market kicking your butt, it's probably time to listen to butt-kicking music so you can kick the market's butt instead. The unfortunate thing about swimming naked inside financial markets, the cost is extreme. It can be the loss of all your capital. At times like this, more than ever, you need to know where the structural support is. So what I've just done down here is to help you out, even if you're not inside the service. The elite service members already have the lower levels. What I've done is I've just used level 2 standard certification and drawn an SC around this. Now, SCs are culminations of SLs or CTKS levels, those lines that you see inside the chart. So the real support starts to kick in between 101,795 and 102,976. There are other levels of structural support in there, but this is the confluence area that should create a very good reaction to price and a rebound. That is, if we continue down. Now, always remember that it's not a pre-drawn conclusion. Just because it's coming down and down and down just doesn't mean that we'll linearly project that down towards zero. That is not the way the price works. That's swimming naked again. Please let me know in the comments, where do you feel that Bitcoin and crypto will go in the next 24 hours? And if you have a really good quote like Michael and JT, I would love to share it with our global family. And of course, one thing to just finish off with, it's really important that you have a plan. There is negative downside momentum at the current time, and that is the easiest place for price to go. Now, don't forget the market makers don't make your life easy and they don't make it predictable. So certainty inside financial markets is a trap. And there's a song for that one as well. If you've not subscribed to that music channel, please do so and listen to the songs. They are pure wisdom. And for the profiting masterclass students, just keep in mind your cuts. And of course, make sure you do the cheat sheet. And speaking of that, let's go through it. If you found a new knowledge gem or learnt something new, please share it in the comments. We are a community of abundance, not scarcity. If you're new, we would love for you to become part of our global family. All you need to do is smash like, subscribe, press the notification bell, and comment on what time it is now. Doing this shows that you are committed to forging a better life for yourself and the ones that you love. With financial literacy, you can become recession-proof. Trading and investing are lifelong professions. Tourists visit during bull markets only to get wiped out, but professionals stay no matter the market conditions because they know that making just 3% per week is a 365% return per year. We are the elite 1% in financial markets. You will create security and financial freedom in direct proportion to your willingness to learn and grow, and never blame. If you commit, your world will improve immediately. If you're going through a life pullback, our love and healing thoughts are with you. The sun will come out again. There is always hope. Be kind to yourself, be kind to others. Show gratitude and happiness, and you'll already feel richer today, and today is all we ever really have. Kate and I very much look forward to joining you again in the next video.